Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index that's opened with very strong gains today, 1% gains for the Taiwan index.
They have been brought in to bring more transparency and also reduce costs for mutual fund investors.
I think it's going to make companies more productive. We're more productive today because of AI. We're hiring more people.
74 odd points higher is the indicative open.
Net TER will go down, so the industry has to figure out how to absorb that.
25,980 on the Nifty. The Nifty Bank is at 58,290.
Our preference is towards the likes of mutual funds or the wealth businesses.
So I'm doing a trade deal with India, and I have great respect and love. As you know, for Prime Minister Modi, we have a great relationship.
We did fall below that 26,000 mark, but now back above that. In fact, the Nifty is now seeing gains of 109 points.
We are at a stage where oil markets are significantly oversupplied.
Refineries have got a wide basket of the crudes which they can process.
Good start to the November series. We're already in November. Nifty is above that 26,000 mark.
Well, that is the day so far, and the recovery is afoot. Yesterday was a slow day, but today another 100 points on the Nifty is what you have. This is Closing Bell, coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surbi and Reema with me. Guys, afternoon.
Hi. Oil and gas, metals, all up and about. But banks have started moving up now.
Resources doing very well, right? Oil and gas, energy, metals, once again.
Once again. But in the second half of the day, the banks which were flat in the morning.
Yeah.
At least at 11 o'clock, the Nifty Bank was absolutely unchanged, but now it's up close to about 200 points.
Yeah, absolutely. And, there's not much recovery, actually, unfortunately, in the entire capital markets / mutual fund part of, things. A lot of those stocks, IIFL Capital 10%, Motilal Oswal 7.5%. So stockbrokers, mutual fund, managers, even stocks like CAMS. CAMS is again down 5.5%. So this whole part of the market has been a casualty of proposed norms. And right now, there's a fair amount of uncertainty that goes on out there. But guys, globally also, it's such an action-packed evening, right? We'll probably get that 25 basis points from the Fed. Tomorrow is this grand India, beg your pardon, US-China. We wish it was India-US, but no. US-China trade agreement. And the market will have to navigate a lot of that. And the wait and watch for us, of course, continues.
And Meta, Microsoft and Google report numbers later today.
Triyoka, Trimurti earnings, and so 3 today, 2 tomorrow, by the way. So it's all tech heavy. But, otherwise it's a decent day. Advanced decline, and the last I checked was some 2:1. 2,000 stocks higher, 1,000 stocks lower on the NSE. So it's not a bad screen at all. There you go, on your screen. And lots of individual movers, action. Metals, once again, picking up. Let's just look at Vedanta for a quick bit. I think that, the demerger case is supposed to come up in the NCLT at 2:30 today, which is now. And Ashmit will be tracking it in terms of what comes out of there. So much back and forth between NCLT and NCLAT. And of course, Vedanta itself has postponed timelines for the demerger, to March 2026 in terms of when they can now do it. But, it needs the clearance. So we'll track that one as well. Numbers also coming in, trickling in. Radico Khaitan at the bottom of the screen. Profits are up some 70%. 140 crores is the net profit for the second quarter. This is a very, very strong number. Stocks, of course, in the Alco-Bev space is perhaps the best performing name out there in terms of large players. So that is something which we will highlight in greater detail with Mangalam in just a bit from now. Well, let me just quickly run you through what else is coming up on the program. So steady start to the new series. Nifty is holding above the 26,000 odd level. Metal, energy names, etc. doing very well. Banks are staging a bit of a pullback. Mid-cap index crossing the 60,000 mark for the first time since October last year. Varun Beverages is surging. So, they've entered into a tie-up with Carlsberg for the African market, and markets are excited. Numbers, though, for the quarter were kind of tepid, not really all that great. Cohance is down still. There's, of course, the MD who's resigned. We had the management will play out some sound bites as well. in a bit from now. And of course, the entire capital market value chain under pressure after those draft norms which SEBI put out yesterday late evening. So that's the picture as things stand right now. How should you position yourself in the last hour? That's the question. Mitesh is with us to help us with that. Mitesh, good afternoon again. Thanks very much for joining in. What's your sense, Mitesh? How would you play it from here? Indices first.
Good afternoon, Prashant. I think one good thing is that till now, I think today, we'll have the highest closing for this up move, which started on the first day of October. And while we still haven't cleared those levels of 26, 180, 26, 220, I think, we might retest them at least. And eventually, my sense is that we will be able to clear them. But yes, as you get closer to the all-time highs, the previous tops, I think some more of profit might happen. But the structure remains positive. So the idea is that if you're long, try to take some profits as you get closer to about 26, 180, 200 zones. See if there's trend to get past 26, 250. If that happens, then I think you can get back into long aggressively. Otherwise, you'll get a decline to possibly buy into this markets again. But the directional structure, if you talk about 2 to 3 weeks, my bias is on the upside.
Stocks, Mitesh?
Yeah. I have 2 buy calls right now. DLF is a buy with a stop just below 770, so 769, 769.5. And look for a target of 815 here. And Gas Authority is having a good price and volume breakout today. So GAIL is a buy with a stop at 182 for a target of 19.
Got that. Lots of earnings reactions playing out. So Coal India just came out with the numbers. The stock has nosedived close to about 2.5%. There is a margin decline and a miss. Coal India share price is weak in trade. But on the flip side, names like M&M Financial, 8% higher on M&M Financial, and Varun Beverages. That is clearly the star. And Mangalam is now joining in. Mangalam, it's not the Q2 numbers, but is it the tie-up with Carlsberg that's got the street excited?
Well, a couple of things, So this time around, 3 things happened. One, the Q2 numbers weren't as bad as feared, so the street wasn't really expecting much. In fact, they were expecting a volume decline in India because of the heavier than usual rains and the flooding in many parts of the country. So seasonally, Q2 is very weak for them. Q2 FY, 26, but for them it's Q3 FY 25 because they follow the calendar year. The second part is that beyond the numbers, there was slight change in their articles of association or object clause of the memorandum of association, where they've now included the business of selling, manufacturing, licensing, distributing alcohol beverages as well. And this is beyond the carbonated soft drinks and water and the fruit juices that they sell already. So that was a good pivot. And the third part, to further validate that, the company has gone ahead and using its African subsidiaries tied up for exclusive test market distribution of Carlsberg beer in a few of those African markets. So all of these things put together has had the stock move higher. So if you just look at, the alcohol market versus the carbonated market in India, the regulations for that are far divergent as compared to some of the other companies or other countries, which is why this test is a positive and also works for them strategically, because PepsiCo and Coca-Cola also have their ready-to-drink mixed beverages that they've launched in a lot of the developed countries and a few markets in the world. So this could further enhance their partnership or deepen their partnership with PepsiCo. Does this mean that they will sell alcohol in India? Does not look like in the very near future, largely because the Indian regulations, the Indian supply chain for alcohol versus carbonated soft drinks are totally different. Having said that, the Indian volumes this time around were flat. African volumes grew by about 9%. International volumes grew by 9%, led by Africa. And that was something that the company had expected when they went ahead and acquired that company to de-seasonalize this overall business. So all those factors doing well for them. Lower finance costs further boosting PAT, and the stock up 9% on the back of that.
How interesting, Mangalam. So this is the Africa Carlsberg high right now reflecting on the stock.
It is the Africa Carlsberg high reflecting on the stock, further powered by no problems in India, aided by lower finance costs, and the remainder has come in on account of the possibility that at some point, they will get more than just, soft drinks in India itself. But that's still a very grim possibility.
No, absolutely. And that would be a separate conversation then altogether, and that would be a different line of business altogether in a highly competitive Indian market. We'll park that aside for later, if at all Varun has those thoughts. But for now, 9% higher. Thank you for explaining that to us. Let's discuss this and more with Dharmesh Kant. Dharmesh, good afternoon. Great to have you in. So you just heard Mangalam there with all the key features and highlights. How would you look at this Africa foray? And otherwise, how do you look at the base business stock and the valuations overall?
Yeah, good afternoon, Survi. Thanks for having me for the show. See, the balloon beverage has been struggling as far as the volume growth is concerned in the India side of the business, and that's the reason why they are looking to other geographies. Africa, as far as beverages are concerned, which is non-alcoholic, their biggest competitor is Coca-Cola, and their margins are 14 to 15%. So it would be margin dilutive if they, market the non-alcoholic beverages in Africa. So that is not a great, thing for balloon beverages to have it as of now. I think it's more of a Carlsberg high, which the stock is running as of now. And going forward, it will depend upon how they are going to, again, monetize this kind of an opportunity into the margin accretive part of the portfolio, to which I doubt it will be a margin accretive kind of a business. Alcohol, as you said, it's a separate story altogether if they enter into that. But again, it signifies that they are struggling to maintain their run rate of 30% kind of a CAGR, which they have been successfully doing for the last 6-7 years. And with ROEs of 22-23%. So I think going forward, the ROEs will fall below 20% kind of a mark, and the run rate of growth will also come down to 15-16%. If you strip off the finance cost and the inventory gains, which was there in this quarter reporting, so then the PAT growth is only 5-6% stripped of that. So too many caveats out there, but the management is forthcoming. I mean, they are forward looking and they are trying to come out and get into new growth geographies. But my sense is, whichever you look at it, it's going to be margin dilutive rather than accretive going forward.
Dharmesh, at Chola Securities, how have you all analyzed SEBI's proposed norms on capping the TER, distributor commissions? And if you can break that up in terms of AMCs, the brokerages, and even, say, the wealth manager guys who are listed in India. How will the profitability get impacted?
See, everyone is going to suffer from this. The profitability across the value chain will be impacted, and the worst it would be the brokers who are executing the transactions because they don't have a fallback on. So SEBI does have a leeway out there. If you are like selling research services, you can price them separately, or some other company management meets you are doing, you can charge the AMCs separately. But that again goes as a cost for AMCs, and that is not accounted for in the expense ratio. What is perplexing is why, the SEBI is trying to regulate the expense part and the profit part of any of the intermediaries. These are not essentials or life-saving, commodities or Manrega kind of a thing or food subsidy. These are financial products and which well-to-do people are availing of. So let the cost and profit be decided by the competition which is in play. We also have a discount brokerage at the same time, premium brokerage is in place. So I was totally, perplexed to see such kind of, falling into it or trying to regulate the expense and the profit part of it. As long as that is there, it does not amount to free competition or a free economy. So we have a different, call on that altogether. This should not be there in place. So that's our understanding of the situation.
And we spoke to a range of players from the mutual fund side and distribution, wealth management, etc. And we'll play out some of the sound bites. Cohance is down. Cohance is back down 10% as we speak. Managing director of Cohance, Mr. Raju, has resigned for personal reasons. We spoke with Vivek Sharma, who's the executive chairman of the company, on what next. So just want to play out that soundbite. Listen in.
We are creating a new position of COO who will help us at platform levels with operations, including supply chain, EHS, and other functions that are important for the business, while the CEOs will be independently responsible for end-to-end P&L for their businesses. So yes, we are not hiring a new MD or CEO to replace Mr. Prasada. We have also segregated operations in a way that there is complete ownership and accountability of these individuals so that they can go with full speed, full direction to really go and create value for shareholders as well as for our customers.
Dharmesh, I don't know if you have a view on Cohance. Come in if you do. Also, a bit about the metals rally that we are seeing. Is it just sort of gains on top of gains, that kind of a momentum move here? Or something is really changing actually. I mean, on primary metals, copper, of course, in terms of global prices, has broken out, new all-time highs, but very few real exposure to in terms of stock exposure, direct stock exposure to copper prices, except maybe Hindustan Copper in a limited way. What's your sense?
Yeah, good afternoon, Prashant. Cohance, I will give it a skip because we have never, deep dived into that stock. Though the CDMO part of the business is, doing well for most of the players in there, and Lawless Labs continues to benefit from that. So there are players who have been doing good out there. As far as the metals are concerned, I think there's a structural shift out there. As tariffs get negotiated between countries, and only now India remains the outlier out there. So things are falling into place, and we are into an interest rate down cycle with inflation totally under control. And most of the geographies and economies of the world are trying to push for growth. So that is one factor which is aiding the metal prices going forward. And dollar index also depreciated a bit, around 1% or so over the last few days. So that again is a positive factor. And the third big factor is there is very low inventory of metals across the board. So be it copper, aluminum or zinc, the inventory levels are quite low internationally. And slight demand, if it is there, so it creates a price surge into the metal space, as it is very sensitivity is too high. So that is helping them out. Direct plays in India, maybe a Hind Copper, Hindustan Zinc or Hindalco can be, you can have some play out there. But commodity as a basket, to my mind, I think it's getting into a structural bull trend going forward for next 2 or 3 years. Though it will not be a straight line kind of a movement, you will have this Brevard kind of a movement playing into it. But I do think this all-time highs, most of the metal companies which are commanding like Hindalco or say JSW Steel, Tata Steel, they will continue to trade at higher levels, and declines should be bought into. Because eventually, Prashant, I do think that things are going to get settled, and in a low interest rate regime with low inflation and all the geographies pushing for growth, metals are here to stay for some time on the higher trajectory of the prices.
CG Power numbers also coming through, and they seem to be a bit of a miss here. 313 odd crores was the net profit expectation, and there's a miss there. Even top line and EBITDA. So 377 crores compared to 431 crores is the EBITDA. So there is a miss. Margins are just about 10 basis points lower than what was expected on CG Power. Stock's not done well for a while. It's now slightly higher, about 12 rupees, 734 on CG Power at this point. So, two numbers since we started the program, Radico and CG. We'll try and get you more details as we go along. Anything else on your radar broadly, Dharmesh? Any other sort of individual names to watch out for?
Yeah, one is we are looking forward to Orient Pro Solutions, earnings, which they would be reporting on 3rd of November. That is coming Monday. We are expecting 30% kind of growth out there, and the trajectory to be maintained. And what the management speaks about the data center architecture stack, which they are getting revenues from 19-20% is there, and how it is panning out. So that is one area. But stock specific, we are more focused right now on most of the public sector banking names, and the trend is very clear. It's like asset quality is getting improved, and because of other income slippage this time around, the profitability is not high, but going forward that is likely to fall into place. So sectors are very few, Prashant, going forward for next 2 months to look forward to with the type of stock prices we are sitting on, and the sectors remains the same. It is the defense space, and going into the budget, railway will again be a big theme to play out for as we roll into budget, and some speed up of execution we have seen there. So Itcon International is one company which we are looking forward to because of the valuation comfort as compared to others in the railway basket, and the infra plays like Larsen and Capital Goods like ABB, Siemens. So these are the numbers. I mean, ABB in particular, we are looking forward to what kind of a number this company is going to lay out. So practically choices are very less, but this is a space which is available as of now.
L&T and BHEL will be the two capital goods companies reporting numbers later today. Dharmesh, great chatting with you. Thank you very much for joining in. It's time now to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction each day. We pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here is today's chart and what it means for your next move. GAIL India is the stock on your screen. showing a falling trendline pattern and a bullish breakout. A falling trendline bullish breakout occurs when the price breaks above a descending resistance line, signaling a potential trend reversal from bearish to bullish. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, and this festive season, there is more reason to celebrate because 10 lucky subscribers every day will win 1 gram of gold. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro.
Well, 100 points, 26,000 plus on the Nifty, and things are looking pretty steady this Wednesday afternoon after yesterday's slight pause. And of course, the one sector which is sort of uniformly under pressure, of course, is the entire capital market space, which is down and out so far. Pashupati Advani is with us, founder and chairman at Global Foray. Pashupati, good afternoon. Great to have you with us here. Thanks for joining in. So just wanted to, I don't know if you own any of these capital market stocks or not, or if you have in the past, but longer run, I guess all this will pass, and the bigger story is financialization of savings, and it will continue. But structurally, when you look at, if you are to follow what's happening outside in terms of lower costs, more a market becoming passive, away from active, as is the case in the US now, in Europe. When we talk about more and more savings getting financialized, we take cue from what's happened overseas. In many of these things also, this has all happened profits of intermediaries keep shrinking, as we've seen in the US and in Europe, etc. as well. So this is on the same line. I don't know if you have any thoughts on how to think about this, Pashupati, what SEBI is proposing.
Well, as you said, SEBI is a good follower, and we learn from other countries, and we make rules that will hopefully keep us out of trouble. It is a fact of life that we are following the other countries, and I think SEBI is trying to do the right thing, and it helps. But I don't know whether it's going to get passed in this form. I haven't read it completely properly. Obviously, as you said, it's not good for intermediaries. It's probably good for banks, but we haven't seen much movement in the banks today. So let's see. I mean, I don't know what the timeline is. I'm guessing 3 to 6 months before, probably kick in 1st April next year. So let's see what happens.
Pashupati, everyone's talking about Lenskart's valuation. You've analyzed a lot of these consumer tech companies, quick commerce. You've nibbled in Paytm at lower rates, come in, come out. Your thoughts on Lenskart, and would you be buying it?
You would be an early investor.
Everything else
you would be an early investor probably.
No, I have a small participation in a fund that has been in Lenskart.
Look, I told you.
Its investments. Yeah, but honestly, I mean, Indians are great at copying. Lenskart is a copy of an American LensCrafter, and they have retail as well as wholesale and online. And we are a country that, as people get more prosperous, they'll start wearing glasses rather than walking around blind. So it's just a matter of, I mean, the whole market cap is going to be huge, and people are going to look at LensCrafters and LensCraft and Lenskart and say it's going to remain as a percentage. And, it's got a sort of, $7-8 billion valuation. So who knows? But, I mean, Indians are going to continue to buy glasses, and, they're also going to continue to buy all the fun glasses, like sunglasses and reading glasses and regular glasses. And, there's no reason.
There's no doubt about the business opportunity, Pashupati. But would you buy it at this valuation, 70,000 crore of market cap and 200 times forward multiple?
That's a stretch, but I've kind of looked at IPOs, and I wait for them to settle. So I wait for 6 months to a year out, and then decide whether I want to be in it, and look at it, and then decide to take a position. Most of the IPOs that we've seen in the last few months are trading at or below the offer price. So let's see how they are 1 year out, and then that's the time to actually come in and take positions. According to me, there are too many IPOs. It's sucking a lot of money out of our market, and that's actually a threat to our market as a whole, even though we're lucky that Nifty's crossed 26,000 finally. 25,800 was a support. But I think that, these are the challenges. You can't keep sucking money out of our market, given that the foreigners have taken their money out, and how much domestic money is going to come in, and how much you're going to suck out for IPOs. So that's the other challenge.
Pashupati, hi. Good to have you with us this afternoon. Speaking of the market, today's big story, right? If these SEBI rules come through and mutual funds have that much lesser elbow room to charge investors, and they pay that much lesser to brokers to execute those trades, I mean, does it materially alter the investment case for both AMCs and for stockbrokers? For stockbrokers, the going is tough. That's why they've all gotten into wealth businesses. But what are your thoughts looking at the uncertainty today? The price is reflecting that uncertainty.
Yeah, to be fair, I think what is happening is that the cost, Indian mutual funds have actually charged a lot compared to, let's say, the US, where the charges are the least. So, there has to be some contraction, and definitely the US mutual funds, you're not going to get paid anymore. So we obviously have to get less. And, now that the proper mutual funds, and I would say the top 10 mutual funds have got AUM where they're able to, they've got economy of scale, so they can quite afford to give some of it back to the customer. And that's what they have to do, because that's what, SEBI is saying, you want more customers, you have to pay. And hopefully the market will be another trillion dollars bigger in about 2 years' time, and therefore maybe even faster. And a lot of that will be in stocks that are with the AMCs. So they'll get money another way. They'll get it by the bulk rather than trying to make money on the same amount of money that they have. And all of them have had great growth in AUM over the last 2 years.
Yeah.
So why not? It's time for them to give a little back to the poor consumer that's actually paying for it. And because you've got a tough market where the return is going to look not so great. It's okay to take 2% when the market's giving you 20.
You're doing 15-20% return. Yeah.
Yeah. So if you're going to give them 4% and then you start charging 1.5%, that's not healthy. So I think that's what SEBI is trying to get in front of.
Pashupati, batting for the common investor. Okay. Speaking.
Why not?
Why not? Okay. Speaking about those returns, Pashupati, just want to get your sense on larger global issues that have been, on top of mind really. One is this whole, trade fiasco or this trade standoff between India and the US. And we'll just play out a soundbite, the latest one from the US president in just a second. And the other is a Fed meeting. Earlier it used to be a very straight line. Fed is going to cut rates. If global markets rally, you will have a bit of that sentiment flow through in India, and India will do well. All those correlations have broken in the last 1 year. So let's do one thing. Let's just hear out what the US president has said now. The latest statement coming from him on where the India-US trade negotiations stand, and the fact that he's quite confident of signing a trade deal with China tomorrow.
So I'm doing a trade deal with India, and I have great respect and love. As you know, for Prime Minister Modi, we have a great relationship. Likewise, President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both. And that's really a great result. That's better than fighting and going through all sorts of problems and, no reason for it. I think it's going to be a great deal for both.
Okay. So, Pashupati, we've spent the last 6 to 7 months waiting and negotiation, and enough has happened back and forth, India and the US. Do you believe if this gets resolved, and at some point it has to, will it be a big trigger for the market? Or is it not so much, and it basically boils down to earnings?
So I'll tell you, we will sign. So far, the president has been known to also change his mind after signing. So that's a thing that one should be cautious about. And it still doesn't, it's created a lot of havoc on the ground. Is your stuff on a boat? What is the rate of duty that's going to be at when it lands at the port? Is it the date on which you sent it? Is it the date that it's been received there? There's a moving goalposts are happening there. I think if he signs the deal with China, he signs the deal with India, and he doesn't do anything signing deals with either of us for the next 3 to 6 months, I think that'll be fantastic to the market. I don't know if anyone's going to really get in front of it. Obviously, the market thinks that something's going to happen, and that he needs us as well. But honestly, China is normally mentioned 50 times more than India in the US. So I think they are definitely the focus is on India, China, because China has got such a huge trade partner with the US. We are less, and I think that even though he's friends with our PM, at the end of it all, it's all about the money, honey, and China, the numbers with America are a lot bigger. So we'll see.
Okay, so give us a new idea. We've been seeing in trade and all. We'll wait and watch. Let's talk companies and stocks. What are you studying these days? What's new?
So actually, what I'm looking for is what I'm seeing is that I'm quite bearish on the IT sector, because I think that they've got lots of issues which they're not going to be able to resolve. That's my view, and I would not encourage anyone to actually jump into IT with both feet. I think the foreigners have taken their portfolio investments and gone, and then instead of which, when they do come back, they're going to come back into our big stocks. And, it'll be into infrastructure and L&Ts and the cement stocks and the steel stocks. So that's where the first money is going to come back. I don't see any trigger right now to make it come back, but it ought to come back because we are definitely a viable market which should receive money. And right now, all we've been seeing is negative outflows from foreign investors. So we'll see. But I think that in the interim, our retail public is enjoying themselves in the mid caps and small caps and having fun. New fund managers are opening up mid cap funds, so that's another inclination of where they think the market's going to move. But at the end of it all, the real money is going to be brought into big stocks, and I want to see a little bit of movement in those before I jump in with both feet. And I also feel that there'll be some interesting PSUs that will come to market and will be given an attractive Ps. We saw that in the defense sector about a year ago when they started pushing out secondaries in the defense sector. They were quite reasonable. I think the government will probably do some more disinvestment and at attractive levels. So that'll be interesting places to put money. Those are my thoughts on the market.
Okay. All right, Pashupati, we will let you go on that note. Thanks very much for joining in. Good conversation as always, and we look forward to the next one. Well, with that, let's quickly get back to the screen and see what's happening. As far as the Nifty is concerned, still about a 108-point up move for the time being. We have Mangalam back with us to tell us what's the latest in the F&O arena. Mangalam, how's it looking?
Well, it's been a good start to the November series so far after what was a stellar October series. However, the curse of that 26,100 mark still continues. So if you have the Nifty that's doing well, the mid-cap index as well, today the Nifty Bank is conspicuous by its absence in the up move. It has moved higher from the earlier part of today, but still not as much as the Nifty. We have the Nifty IT, Reliance and the Metals pack, which have actually been doing a lot more of the heavy lifting in today's trading session so far. But if you look at the Nifty days high, we still haven't crossed the earlier high of 26,104, which was hit on October 23rd. In fact, the one thing that we'll be watching out for today is that whether the Nifty closes above that 26,000 mark or not. Nothing to believe that it won't, but the last 3 occasions it's crossed 26,000 on an intraday basis. It hasn't closed above that, so it actually fell from those levels. Today, it looks like it will close marginally above that 26,000 mark, and that has got a lot of put writers fairly active. The other thing we'll look at is the 26,277 mark, which is the previous all-time high for the frontline index. So 26,000 and 26,277 are the 2 marks which are very important in terms of a range, and that's exactly where a lot of the action is. 26,000 put, fairly active, 94 rupees premium, telling you first support comes in at the psychologically important 26,000 mark, and thereafter is 25,900. On the way up, however, 26,100 call, which is closer to today's high, continues to see some writing, and that too has a higher premium. So closer to record high, we might face some sort of supply coming in. 26,250 thereabouts is what the premium on the 26,100 call tells you. But a lot of individual stocks are on our radar. Varun Beverages, a big move coming in out there. A lot of long positions added. Metal stocks doing extremely well. That sale also, open interest jump of nearly 22%. Watch out for whether that stock goes into F&O ban or not. Suzlon Energy is the other one, which has seen a lot of long positions being added too. And finally, as we move towards the end of November series, in 4 weeks from here on, as we start a new series, a few triggers that we'll be tracking, a lot of them will be front-ended. Obviously, tonight we'll have the outcome of the US FOMC. Thereafter, developments around the trade deals, both India, US and US-China, and also remainder of the second quarter results. All of them would be extremely crucial to track.
All right, Mangalam, thanks very much for that. So it's action-packed next couple of next few days, but of course, next few weeks as well. Vedanta is spiked up about 2% in the last 10 minutes. If we can have the intraday up. So there you go. It's up. It was up 2 when we started. It's up 4 now and moving up as we speak. I'm not sure. The case is supposed to come up in the NCLT. We checked about 15 minutes back and, we were still waiting for the case to start to come up in the court. But we'll check again. 523 on Vedanta. So that's a sharp move that we are looking at. We'll take a quick commercial break here. As always, we'll get you some short-term trading ideas. And of course, dealing room chatter with Nimesh as well comes up in just a bit.
Welcome back. It's a good start in the November series. The Nifty continues to hold on to 26,400, a gain of about 0.4%. Stocks related to the shipping sector are now moving up. So dredging, SR shipping are up double-digit. Dredging is up nearly 16-17%. Graphite India is seeing a bit of a spike, and Blue Dart came out with good numbers, and that stock has also soared nearly about 18-19%. Urban Company is back on the buyer's radar. ARC reports that Radhakishan Damani has bought stake worth via his various entities worth 175 crore rupees in Urban Company. So his investments in new age tech companies continue, and that stock has made a bit of an up move. But Mitesh is now back with us for Bonanza Portfolio. Mitesh, what are you doing now?
I have two BTSC calls. I think the power stocks are doing very well. So I have picked up Power Grid as a BTSC call. Keep a stop below 292.7, but for target for around 298. And Havells is the other one trading near the day's high. I think that's a BTSC with a stop at 1496 for targets of 1525.
Okay. Mitesh, got it. Thank you very much. And thanks for all the trading advice through the day. You have a good evening, and we'll catch you again with the market action tomorrow. But for the time being, it's time for all the D Street chatter. Nimesh is joining in with that action. Nimesh, so quite a roller coaster today for the asset management and the broker stocks, right? But beyond that, what else? What's the sentiment like? What did you pick up?
Well, it should be a good start to the November series. Again, the leader of the pack seems to be the PSUs, and I've been saying this, that selectively there is PSU buying happening, and the PSU index is at 1.5%. But within the PSUs today, it looks like some of the underperformers of the laggards within the PSUs are now showing a bit of a catch-up rally. So clearly that's playing out within the PSU basket. Flows again a mixed day is what I understand. But as I said, PSUs is something where there is a bit of buying interest. Capital market stocks, of course, they are under pressure today on the back of that SEBI order, and that can have a bit of an impact for sure in terms of earnings, and that's why those stocks are reacting in today's market. I guess for the November series, I've been saying for the last 2 days, the latter part of the earnings as well as the Indo-US deal, that's going to be a big trigger to watch out for. So clearly, again today, because of some noise, you're seeing a bit of rally in Adani stocks as well, but it looks like the momentum is clearly there, and now it's spreading out to the broader markets as well.
Okay, all right. That's the broader take in terms of what's happening in the market. Stocks, Nimesh, what's on the list today?
So the first stock on my list, Prashant, is Colgate. We normally don't talk about this name, but surprisingly, this is one stock where one of the domestic leading mutual fund seems to be adding this name in the last couple of days. So that's something to maybe that explains a bit of delivery-based buying happening in Colgate of late. Second, couple of stocks where I'm expecting large block deals very soon. Himadri Chemicals and Shyam Metallics. Both have been in that narrow range of late, but expect large block deals soon. So just to clarify, both these blocks are non-promoter blocks, so none of the promoter entities are going to sell in these block deals. The third name is Max Healthcare. Within the so-called insurance names, this stands out in terms of buying interest back. So maybe a bit of buying from larger FIs in Max Healthcare today. And last is Jubilant Pharmova. This is interesting. The earnings are yet to come, but I understand one offshore fund has been an aggressive seller in the last couple of days. Looks like it's at the fag end, and that can exhaust very soon. And some domestic mutual funds and AIFs have already bought this name. So watch out for Jubilant Pharma in terms of large block and maybe earnings as well in Q2.
We highlighted Varun with Mangalam. Nimesh, anything you picking up on this? It's a sharp move. I mean, the quarter was not all that great, but of course, there's that Carlsberg thing.
I think a couple of things, Prashant. One, there was no big, ownership or a bit of buying before the results, so to speak. And result has actually beat the estimate. I was looking at the numbers. The street was somewhere around 680 in terms of profit, and it's come at 724.1. And second, of course, that Carlsberg's deal will mean that they're going beyond, they're getting into the alcohol space as well. So I guess these were the two main reasons why you've seen a big reaction. I guess large part of the reaction is because there was no preemptive buying going into the results in Varun Beverages.
The other one is M&M Finance. Again, I mean, it sits up 6 after. Usually, we don't see a positive reaction after earnings, but this one, and of course, I mean, it's not that new, but the CEO is what, a year old, maybe a little more now, right? Yeah. Raul Rebello. So that's up. I think there's got to upgrade as well. Maybe I saw one of the foreign brokerages with the note post results. Actually, there were a couple of upgrades, Prashant. Most of the streets has raised the target price on M&M Financial. And even if you look at something like Morgan Stanley, while they have an underweight rating, they still believe that, from a downside, at least the downside seems to be protected
while upside may not be the case there. But at least from a street perspective, most of them has raised the target price in M&M Financials.
Okay. Nimish, thanks for that. Stay there. Stay with us.
Yeah.
Because Vedanta is also, there's news coming in on Vedanta as well. And maybe we can talk about that as well. So, I think Ashmit Ashmit is not with us. So, Nimish, what we'll do is we'll just get Ashmit on as well, and then we'll come to you. Vedanta application for demerger in NCLT suffers a delay. That is the news which is coming in. And look at the stock. I was pointing out how at about 3, it was up 4%. It's basically given up bulk of those gains. And NCLT is going to hear Vedanta's plea government objections once again. So it's been long in the making, but of course, no decision yet again. Vedanta is seeking rehearing at the earliest. NCLT to begin rehearing case on the 12th of November. Anything else, Surabhi?
No, I'm just saying the surprising fact is that apparently the entire bench has been reconstituted.
Yeah.
Which is why the fresh delay. And then therefore everything has to be, the whole matter has to come up for hearing all over again. I think maybe Ashmit can give us the details as to why the whole bench had to be reconstituted, what the legal issues at play were. But yeah, it seems the wait for that demerger is just continuing.
Typically in courts, etc., if a judge retires, a new judge comes in.
Or if a judge recuses, himself from...
But if somebody's been hearing the case the last few hearings,
why would they recuse now?
Yeah. So we'll see. But typically, if somebody retires and a new comes in, they start hearing the matter from the beginning. So we'll see. But it's not done. At least today is not the day when this kind of goes through. So there's a delay. 12th of November is when the rehearing will start once again. So we'll revisit this with Ashmit in just a bit because he's been tracking and I think he was listening into the court proceedings as well. But L&T will report later today. So let's get a quick preview out with Vivek, who's with us. Vivek, take it away.
Well, a lot of news flow, but L&T also very important to watch out for. Remember, Capital Goods Infra Major will report its results maybe the next couple of hours. So, this particular quarter, it's been an eventful quarter. Lot of order wins as well as L1 positions or lowest bidder position as far as West Asia is concerned. So, that will be key to track. The second important point is, remember, Hyderabad Metro divestment is something that the management has already alluded to. So commentary on that will be key to track. Talking about the numbers, revenue seen higher by close to 13.5%. EBITDA seen higher by close to 10%. The EBITDA margin seen softening on a year-on-year basis, down 40 basis points. And profitability higher by 17%. JM Financial says that the company should go ahead and beat the order inflow guidance of 10% that they had given at the start of FY26. H1 order inflows, they expect at close to 2 lakh crore rupees. Now, core EBITDA margins, the key to track as far as L&T is concerned, is expected by JM Financial at close to 7.9%. That is something that the management has been looking to go ahead and improve, but again, that will be key to track. In terms of the guidance, top line growth for 15% for FY26, order inflow guidance of 10%, which is expected, the street expects the company to go ahead and increase the order inflow guidance.
Okay. All right, so we'll watch out for those numbers. Vivek, thank you for the heads up on that. Mayuresh Joshi is with us to take us to the final leg of today's trading action. Mayuresh, great to have you in. Let's start with Vedanta, actually, because it's a different beast for investors to track because you have access and exposure to a lot of the interesting metal businesses, which are anyway, at their own level doing very well. We've seen what happened to metal prices, whether it's aluminum, copper, everything in metals is going up. But then you have this 5-way demerger, and it's still in the works. What would your advice be? Because the stock actually has risen pretty well. It's very close to its all-time highs at 500 plus now.
Afternoon, Surabhi. So I think it's penciling in the best to come once the demerger happens. And the caveat here is once. And therefore, I think the court proceedings and the delay thereof is something which will act as an overhang on the stock. And you're clearly seeing the kind of reactions the stock probably gives as either the court date approaches or the news that you just flashed in terms of the entire bench getting reconstituted. So I think any delays hereof, at least as far as court proceedings are concerned, I think that can create some element of an issue as far as the entire demerger process is concerned and the entire value unlock. Anybody holding can hold on to the stock at this juncture, Surabhi, but I think clearly it has to go through these court hurdles to probably ensure that this process starts working in terms of the estimates expected to come through at least on a standalone company basis from FY27.
20% on Blue Dart, Mayuresh. What have you all made of it?
I think decent set of numbers. Afternoon, Rima. I think the ground express division is still 35% for Blue Dart, and that is expected to grow in double digits over the next few quarters. When it probably comes to the air express division itself, I think the expectations in terms of new fleet addition that Blue Dart has probably done, the utilization levels are pretty decent. In fact, they've reached around 80-85%. And therefore, I think as these utilization levels start inching up, you might probably see the leverage component or the operating leverage component play out. Q2 is expected to be relatively softer for Blue Dart, and the numbers were relatively stronger. They head into Q3, which is probably their strongest quarter that they will probably witness. And therefore, I think the street remains very, very optimistic based on Q2 numbers. That both the volume growth in terms of ground express, in terms of recovery of the air express, in terms of utilization levels, might actually show in terms of recoupment of margins taking place, and therefore better numbers in terms of earnings. So I think very good set of numbers. The street is very, very optimistic as far as Q3 is concerned.
Okay, that's Blue Dart. What a mover today, 20% circuit. Now let's just go back to that Vedanta story for a bit to understand why is this delay happening at the NCLT. Ashmit is joining in with the latest. Ashmit.
Well, a minor setback being suffered here at the hands of the NCLT. Bear in mind that Vedanta's application for demerger was pending approval before the NCLT. The arguments were in fact made. There were lengthy arguments made by SEBI. There were extensive arguments that were actually made by the Centre, the Ministry of Petroleum Natural Gas. They had in fact expressed their opposition to Vedanta demerger. Now, all of these arguments had broadly been completed in September. And since then, the matter was listed twice in the month of October, but the matter could not get taken up. Now we are in a situation where the bench of the NCLT itself has changed. The judges who were hearing this case, they themselves have changed, which has led to a situation that a new bench of the NCLT now says, we want to rehear this entire case once again. Now, bear in mind that Vedanta counsels were present before the NCLT. They expressed a sense of urgency, said they want to hear this matter and get it over with at the earliest. The government counsels were also present. They too were given the opportunity that they will also have to argue once again. Bear in mind, the Centre is opposing Vedanta's application on a number of counts. Number one, they say there hasn't been full disclosure with respect to their liabilities. Also think there's a financial risk to government dues, to statutory dues once this demerger process is underway. Also going on to say that there are a number of liabilities that were not disclosed. There hasn't been, Vedanta hasn't come with clean hands. That's the broad sum and substance of what the government has been arguing. SEBI on its part placing their stance on record today, clarifying that they were not happy with Vedanta modifying the demerger plan once the approval had been granted, but Vedanta today clarifying before the NCLT that even SEBI, which though was not happy and gave a rap on the knuckles to Vedanta, has also concurred, has granted its blessings to the modified demerger plan. So as of right now, a minor setback, a delay being suffered. The hearing in this case will resume from scratch all over again, and that's beginning November 12th.
Ashmit, thanks very much for that. I guess people waiting for something sort of a forward movement of this would be disappointed a little bit at the margin. So 512 has come off the highs, which it had hit at about 3 o'clock or so. We'll take a quick commercial break here. We'll come back with more markets. I think there's about 8 minutes to go for close. Stay tuned.
Welcome back. 3 minutes left to, wrap up today's trading session. Good close, likely to be above 26.50. Mayuresh, CG Power came out with their numbers. I don't know if you had a chance to look at it. It looked like a bit of a margin miss, but the stock is up 4.5%. Any early thoughts?
I think the stock has performed extremely well, Rima, over the last few years. And therefore, I think the expectation in terms of more orders coming their way as we head into the second half is clearly reflecting in terms of the price action. Yes, margins were a little bit lower than what the street probably estimated or expected. But a large part of the expectation largely is that as they keep on executing well and as more orders come their way, with relatively better margins, and they've got a lot of the working capital requirements under control, that will efficiently show up in ROEs, in reported ROEs and ROCs as well. So I think very, very optimistic in terms of more orders coming their way from the central government or otherwise to boost execution and numbers there.
Yesterday's big winner, Cartrade Tech, is down 5.5%. It's been a big mover, 200% higher in the last 1 year. What from here?
I think we'll have to wait for declines. I think it's been a significant move as far as Cartrade Tech is concerned. And it has been backed by decent fundamentals from the all-time lows that is probably saw last year. But again, valuations have become very, very expensive. As we see it in markets with India, I think it's trading way above its pivot and probably making a late-stage base. So you'll have to wait out for significant declines on this one.
Cartrade Tech came out with numbers yesterday. Margins were 33%. But in the conference call, they said that margins can reach 55 to 60%.
Wow.
Yeah, I mean, that's what, and I think that's what got the street excited yesterday. But of course, it's moved up a lot.
What is it? Car Wale, Bike Wale, OLX, right? All these platforms.
All these platforms.
Margins should be very high, asset light, right? It's just a platform.
It's just a platform, right? And then it benefits from the GST cuts. I mean, the OEM sales, etc., will show up in the revenues. And plus, margins are so much higher.
Well, the stock's done phenomenally well, right?
Yeah.
I was just looking at actually, that's the thing. Anything, you look at something like Allied Blenders, completely different business. It's a second year in the listed space. Was available at $300 last year. No takers. $650 now in basically a year. Post listing, and I think that's the time to look at many of these names. Right after listing, the fizz gets out 4, 5, 6 months in, and the stock starts languishing, and then but you got to keep a track and track some of these businesses when they come to attractive kind of levels. And many of these stocks, of course, I mean, there is the liquidity aspect. People are bereft of ideas, so there's a lot of liquidity chasing underperformers and maybe